All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for October 6th, 2020. Let's see what we have today. Today's theme is elect a clown and get a circus. That's what we saw today. So we have a 30-day high. That's about 25 days ago. We had one big sell-off, one bump, a second leg down to the 10-day and the 30-day low, which was made, about, minus 9 days ago. And then we've had one rebound basically to the previous hump of the peak of the Bollinger Band mean and just cleared the previous hump of the dragon. We had a nice day yesterday after a stable week where we had made gains. So here was the sell-off. Then it replied last week with a good one level up. It got through the dragon. That was good. Got through the dragon. And winter had turned to spring and everything was good. We closed above the Bollinger Band mean and we were looking to push beyond this new 10-day high. It opened at the previous 10-day high and took off, wobbled around a little bit, and then Trump opened his mouth and said, well, we're not going to sign the $2.5 trillion stimulus package for states and local governments and the poor. We're going to wait till after the election. And on the basis of that, the market tanked 300 points and looked really bad in the overnight session. Elect a clown, get a circus. So we briefly made a new 10-day high. This was a sell-off from 342 down to 334. So that's minus $8. That's 2.7%. That was a 2 ATR sell-off. Actually, not quite. One and a half. Let's not give him more credit than he earns. So 1.5 ATR sell-off in about 30 minutes. And now that brought it all the way back to the skin of the dragon. There's the spine of the dragon. There's the belly, or there's the lower skin of the dragon at Z1. Here's the belly of the dragon. All of that's in play tomorrow, as is now the 30-day, which went negative today on the sell-off. And then we have the PSAR value tomorrow at call it 326, and which is also the peak fair value. And then we have the PSAR flip with the belly of the RL10 down here at 323. So that's like we could reach that sell-off in 2 days. If we had 2 more days like this, we could be right back here at the 10% sell-off. So we are that vulnerable to that clown in the Oval Office. And as long as he's on steroids and doing everything he can to lose this election, because he likes running for president and talking about being president, I don't think he likes being president. That's my only way to make sense of all this mess. The upside, well, we have to get back above the Bollinger Band mean at 338. We have to get above the 10-day high at 342. And then Z1 is in play at 346. That doesn't seem very likely. But again, this is a market that is designed to maximize pain and suffering. And that's what we got a little bit of today. So it's hard to talk about the winners and losers overall for the day because of that that seismic shock. It was looking pretty good on a recovery in the techs and energy, but then the sell-off kind of torpedoed all of that. So let's see what the residual looks like. It looks so far like there's less lag on this connection, so this is feeling pretty good. Okay, so the S&P ended up net down 1.4 for the day. Diamonds were slightly less painful at minus 1.35. Still not good. The Russell held off better and at minus 0.3. Treasuries turned it around today, flight to quality 0.54 with a rush at the end of the day. Healthcare in the sectors, healthcare was slightly better at minus 1.3. You had materials, Mexico, and finance down around 1.2. Clean energy, which was great earlier in the day, ended up giving back a lot and closed down 0.44. Japan minus 0.22. Again, treasuries up 0.54. VIX and oil 1.4, 1.6 for the day. Simon Property Group 1.7. You had a few selected techs. There's NVIDIA 0.7, Virgin Galactic 0.1, and then everything else just lost a little bit less than the market. So there's Cisco, Goldman, Intel, Nucor, Nikola, but the rest of the day was pretty ugly. So the things that underperformed the market today, then, the things that really got smashed. So the S&P down 1.4. You had Brazil 1.4, energy and tech down 1.5, the FANGs down 1.75, discretionary 1.85, oil exploration minus 2.37, silver down 4%, which really struck me as odd. But you got to follow the price. Wheat and precious metals minus 5%. The stocks that really suffered today: Boeing minus 7%, Devon Energy minus 4%, Twitter and Amazon 3 and 3.5%, Apple and Tesla down 2 3/4. Cliff giving back in the materials sector. Those mid caps could have benefited from some economic stimulus, and so we saw the big turnaround in materials today. So Cliff down 3%, Alcoa 2%. U.S. Steel 2%, Home Depot 2%. So this was a pretty broad-based sell-off today, and not much good happened. All right, let's take a look at some individual trades. But this is something I want to. Is Catherine in here tonight? Catherine has just been doing the work. So this is her her coaching update for August and September, and so we got to think about what kind of feedback to give her. She gave me some text to go along with this, but let's see what we got here. All right, so over the course of 2 months, so 2 months is about 40, call it 40 trading days, 40 trading days. So she's got 207 trades. So that's about 5 per day consistently, all day trades. Her worst trade was -1. So when we start thinking about that histogram, we're thinking about the first thing is come on. Don't lock up on me here. So we want no trades. God dang it. So I want no trades worse than -1. So that's a check. Then a tight standard deviation. So her average trade is about 0.15, plus or minus one standard deviation of, call it 0.9. So that's a nice tight normal between -1 and +2, and it is positive expectancy. So so that looks like a normalish curve through here with positive expectancy. So that's good. And then she had her best trades were out here at 3R. So she's open to the possibilities of greater than 2R gains. So on a histogram basis, she's getting it done. So she's got about 21 scratches. So that's about 10%. So she's cutting those early. 84 wins, 102 losses. And so that's about 41% and 49%, which means 10% is in here. So when you look at, if you scratch those, that gives you about a 45% win rate, 55% loss rate. The average win is 1. The average loss is, call it 0.5. So that's basically a coin flip that pays 2 to 1 with about and then the difference, that 5% is paying your commissions. So there's a slight drag on that. So how often do you want to trade a system that gives you 5 opportunities per day? That's a coin flip that pays 2 to 1. And gives you a equity curve that looks like that. And recognizing that, I think this was a lot of adjusting and adapting her rules. And we're seeing evidence of learning plus discipline. And that ain't bad. That's tradable. And she's making some improvements in here that I think now that she's got some skin in the game and got some repetitions in the weight room, this is feeling pretty positive. So the way she's trading is the way we're trading. Kata number 1, looking at a couple symbols, restricting herself to a span of control of 2. And I think with the chain trading, so if she just has, her standard symbols of, say, DIA and EWZ, that if she can get not just the side supported spring crossing, but can start adding some of those supported fall crossings, or chain trading that to the supported winter crossing, especially if that is like a Z3P, she's going to be able to chain trade that very nicely. So primary and then alternate second pathway. So I think we're in pretty good shape going forward. So I think I'm treating this as a validation of the hybrid style with those 5 patterns, starting with kata number 1, and then adding those two patterns on those 2 symbols. I think you can make a living on that with no overnight risk. So +1 to Catherine. All right. Here's one. Let's take a look at a series of representative trades. This is from Bill's and Bill and Jeff's excellent adventure, right? So this is in IYR. And this weekend we talked about IYR being quietly poised for some amazing moves, and this on the multi-time frame NDX, this turned out to be well positioned on the NDX as being the strongest mover on that 3-day. So they're trading mechanically with a robot between 9:30 and 11, or is it 9 and 11:30? Yeah. Oh yeah. I'm sorry. 9:30 to 11. And just the SSC. And so this pattern sees the big sell-off. Winter becomes spring. Enters on the PSAR flip. Cashes, and they're using, they're testing the PSAR as the stop rather than the Wu Wei. They're just doing the PSAR as the stop. And then that caches basically 2R. The next one they take is here's a winter that becomes spring, and this one doesn't really follow through, and it's basically a scratch. They are not taking these as part of the system that they're studying to highlight just that morning session, but they are tracking it just so they can see what happens at other times during the day. And then this one, after a sideways quiet channel that has become a Z3 pinch, and when the 270 rejoins, I think this is there's the 270, here is the 90, and then the 30 and the 10 are all inside this tight, and that's going to be a super pinch right in here. And the breakout from Z2 when the winter becomes spring becomes summer, that's the SSC right there, bang, and that one just gives you 3 1/4 just by using the PSAR in the usual way. So that looks promising. Let's see, let me slide this over a little bit more so I can work left to right. Yeah, this one was PBW. Didn't even have time to mark that one up this morning, but this was such a standard play that big gap up outside of the Z3. So if you just take, God dang it, come on. Yeah. So there's a that is about a 25-cent. If you just take it at the crossing of the Z2 with the Z3 as the stop. That's your hybrid frog entry right there. When it breaks below yesterday's close and summer becomes fall, this would be a logical place here, or at the crossing of the RL270 to add a second position. But even if you don't, you can see that you're deep in the money down here. So even if you don't take this as a second entry, at this point on such a nice move, You could even start stalking this as a, well, how far off the off that low am I going to go before I just take the move? So if you kind of trade with symmetry, if you say, if I was willing to risk that much, you might just say, well, let me hang that off a low that I'm satisfied with, because you've got one big chunk, two big chunks, and now you get three legs down. So now you're stalking the exit. If you just use symmetry, then you're going to have a stop right about here at the top of that blue box. You might say, give me the Z2 and be happy with it. But in any case, you're going to lock in a pretty nice trade on PBW. This one was in DIA, and I want to talk about this one with respect to the Wu Wei exit as well. So this is what I noticed today. So the thought experiment is this: when to override the Wu Wei exit strategy. Pardon my spelling there. I was in a hurry. Well, one of the times you might override that is when the whole market is showing weakness and DIA is quietly solid, but everything else feels tentative, right? So there was a gap up today, and then the whole market sold off. But then of all the sectors, DIA actually felt pretty well. So here's where it closed yesterday. It gapped up, sold off, and then rolled up. So here's a belly of the RL10, and here's the belly of the dragon. It makes a move up to the VWAP, comes back down, finds support. Now the RL10 rolls over at a higher level. The dragon rolls over at a higher low. So you have this support and a higher support, and now this becomes a beautiful supported spring crossing. This is almost like pattern 4 in first generation RLCO, and that's basically this a low, a higher low, and then you're buying that as a and you're hoping that it breaks above this price right here. And this is where you would add a second position once it can break above this peak. Now, the point I want to make is, under what conditions would you want to override the Wu Wei exit? So let's look at this from a Wu Wei exit perspective. So here's the SSC. So I drop my stop down here to where the PSAR is going to flip, which is where the RL10 is going to flip. So I have from 282 to 281.70. So I've got a 30-cent risk box inside here. Now, according to the Wu Wei, I'm going to leave this stop in place until such time as I see 1, 2, 3 PSAR dots above my entry level. All right. But the rest of the market was weak, and only DIA was showing any kind of gains. And I feel good that it already has these gains, but I'm at least on the current rate 1, 2, 3, 4, 5 minutes away before I see those 3 PSAR dots. And then I would be happy to move that stop to here. But now I look at this and I say, you know what? It gave me this move, a lower, and now it's starting to take off. So I don't want to wait 5 minutes to then move my stop to here. I can just move my stop right now because I see this pattern and I'm thinking about the rest of the market. I just decide to go ahead and move my stop here to the bottom of the dragon. And now I'm just going to leave that in place until such time as the PSAR picks up. And then I will revert to the Wu Wei out here. But what I'm doing is I am preserving this gain right now instead of waiting according to the standard rules. Why? Because this weakness in the market and the fact that there was a gap up and a harsh sell-off made me feel that this was a very tentative move. Now, it turned out that this actually went pretty well. And if I just followed the Wu Wei, this was going to be okay. But I would rather, in this case, bring that back to here and make this move when I can and lock in a piece. And now I have removed some anxiety. And I'm at a price level where if it failed here, I'd be happy to make bank on that. So the point I want to make here is, like a mountain climber, I start thinking this way. When do I place protection when climbing? Before I need it. So this thing is moving up, and I take the opportunity to peg in some gains. When do I place protection when climbing? Before I need it. When do I check the air pressure in my tires? Before a long trip and periodically. So if I can do this and it feels like low risk, like I'm moving this stop up while the price is climbing, not while it's racing down, but while it's climbing, I have a window of opportunity to go ahead and peg that stop in here and make some gains. So that's me exercising almost like a sniper mentality to move that stop up to here before the standard Wu Wei exit. Now, I love the Wu Wei exit, but here's a case where it felt like the override was legit. So while that one was happening, here's XOP. So XOP also had this big gap up and raced up and then started to fail. So I look at this one and say, well, it crossed the VWAP here, went summer turned to fall, and now this feels like it's breaking down, and I've got about a 20-cent risk box. That's sort of a standard size. That's a 0.5%. So I say, let me go ahead and take this short with a stop at the top of the dragon by 20 cents, minimum manageable risk box. I'm going to get 1, 2, 3. On the fourth one, I move the Wu Wei stop down. Now, in this case, because the whole market felt flaky, I wouldn't be offended if you just picked up the Wu Wei exit right here and we're picking the Bollinger Band mean and then decided to accelerate with a sniper, or if you just move this down here and picked up the PSAR and exited here. So either one of these pathways gives you a chance to exit here, or you'd exit here if you were just Wu Wei. But that's a really nice move. And this is an orderly recovery, and the amount of give back is about the size of the initial risk. So that earns 1, 2, probably 3 execution R on this very orderly move, which comes back to basically it finds support where it was yesterday. Now this one becomes a supported spring crossing. So I pick up the Wu Wei exit here at the PSAR flip. I leave that in place. Here's my entry. So I get 1, 2, 3. On the fourth one, the Wu Wei exit would bring it to here, and then pick up the Bollinger Band mean. Because of this was almost the same reason as DIA, but when I saw that nice sharp move out and crossing the VWAP, I decided to go ahead and bring my stop up here, and I was managing it this way. And when I got here, I just wanted to lock that in now, and now I felt like I locked in those gains instead of letting it come all the way back to here. I would have cashed it right here and made better gains. So today was a gap up and starting to fail, and it just felt a little different than yesterday's nice gain. So I was being very tactical about trying to lock in some gains. All right, so this is Nikola, and this is just opportunity trading. I have my little coyote picture here. Where is he? There he is. I'm going to see a lot of the coyote today. The master opportunist. So I already had a couple trades early, and so I was not playing this one right from the open. All right, so what we have is we had another gap up, harsh sell off. Now I noticed the low at the belly of the RL10, another low after this little bump and return. The RL10 bottoms out here. We get another move up, and then a higher low, and now what we have is a low and a higher low, and then I notice it has gone into the spring, and by this time I feel like, well, I'm going to buy it here with a stop down at the PSAR in the usual way, because I wanted to get it before it went above the VWAP. So now if this is my entry, here's, call it 1, 2, 3 PSAR dots above. This is where, bring that up to here, comes to the Bollinger Band mean, starts moving up here. I look at this extreme peak, second extreme peak up around Z3, and it starts pulling back, and I just execute instead of waiting for the manager exit, which would have gotten me out here. I decide to accelerate to a sniper exit, and when it crosses the dragon and hits the PSAR, I just take that. And so if this is the unit of risk, we get about 1, 2, 3 execution R on that one. So today was about locking in the gains. The bird in the hand was definitely worth 2 in the bush. So the point I want to make again is this: a low and a higher low and the supported spring crossing, and off we go. All right, so this one is Tesla. So I've got a long swing position on this one. I just could not pull these were all the places that I thought about taking a short position. I just couldn't get past my preconceived notion. So I basically watched this thing go all the way down, and then the supported spring crossing felt correct, and I gave back a lot, and it was a fractional, basically a scratch. And then it bottomed out here. So I do the reentry on the supported spring crossing. It actually went from winter right into the summer. So I have my standard exit here. Right about here, we got to get that to the supported, or to the Wu Wei exit. And that comes here. That follows the Bollinger Band mean all the way up. It ends up giving back that much, but a pretty good trade. That's about 2 execution R. We get another harsh winter. It comes right back to where the buying pressure hit last time. It finds support at that level. The RL10 rolls over, crosses the baby dragon, gives me a supported spring crossing with no follow through. At that point, I had thought about this one but didn't take it. I had run out of will by that time. I just felt like I'd been given back a lot on there. But this was a pretty good trade. And Tesla, not too bad. Next one, this was, so here's the, let me get the arrow on this thing. Here's the opening of the day. It's in a nice quiet channel. You get at the 30-minute mark in, you start getting an official sideways quiet channel. I thought about this one when it broke out of the river, but I had other positions going on. It was more of a span of control issue. It moved up, pulled back, sideways. I thought about this breakout because this felt like it was a higher low than here. And the PSAR was supporting. So I thought about that, didn't pull the trigger. I saw the Z3 breakout. I felt like, man, I missed it. So I didn't take that. Watched it do this. I thought when it didn't fail further, I thought about this one, didn't pull it. I just didn't have the will. I thought about this one on the next leg breakout. I didn't take it because I felt like I'd already seen the move. This one, it pulled back in an orderly fashion. So I finally took the trade, and then it immediately crapped out, and I stayed too long because all I could think of was all the opportunity that I missed. So I stayed longer and let that, what should be a scratch, turn into a loss. So I was hosed up on that one. Not very good. This one is the Russell 2000. This one was very orderly. This was the strongest of the U.S. equity indexes all day. So this had a gap up, sold off nicely into the winter, gives us a supported spring crossing. It moves out smartly. It doesn't fail to the Bollinger Band mean. It holds at the VWAP. So I buy a second position, but then that fails. So I scratch, the second entry scratches, but we make bank on that managerial exit. So good trade. It mucks around sideways. It holds this support level. I buy the supported spring crossing. It scratches. It holds at the VWAP. I buy the supported spring crossing. That one works. It was so choppy in this area through here that I thought about adding here, but I wanted to see it clear the 270. So I add a second position here. So we get a nice leg one, a leg two, orderly pullback into the Wu Wei exit. That felt really professional. Next one up, PBW. So this was the hybrid. I'm sorry. This was the hybrid frog entry that we showed earlier. That sold off through here. I had a bunch of other trades going on in DIA and IWM and Tesla. So this was span of control. I didn't get this one. But what I liked here was we had a low and we had a higher low. So that supported spring crossing felt correct. And I cashed the usual way at the Bollinger Band mean for a fraction. Pretty much bottom ticked. It gives me another supported spring crossing. So we buy this one with the stop right here at the PSAR, right about here. That moves up in the Wu Wei exit to about there. It stays in place. That stays in place till the Bollinger Band mean comes online. The Bollinger Band mean is going to get us out up here, but we get a second position here, a third position here. Very nice trade in PBW. After this exit, it doesn't fail further, so I buy that one. It gives me a little gain. I really like this higher low, so I bought a double position here, and then this one exited shortly thereafter on the great Trump tweet shenanigans. So this one had a double position going on. You don't see me do that very often, but this move was so compelling that after I exited, I put a double scoop back on right there. So that's PBW. Then Trump opened his mouth. So that trade that had 2 scoops on that was doing real well ended up cashing here. And then the collapse happened and everything was collapsing. So I was already on PBW. So this was short at the Z3 breakdown. And it was running with the Z3 all the way down, like a double bottom and then a 1-2, and I just cashed it at the VWAP. It rolled over quick, never got through the dragon, so I re-entered short here, and then just took a 1-2-3 exit again. So this was 2 quick hits on standard position size with a single, just a single position in both. This was 2 opportunity trades. This was all about Mr. Coyote being ready. Then the other opportunity trade, this one was in DIA, the old reliable. So Trump tweets, market collapses. I get short on this one at the crossing of the VWAP, which was also the Z3. So I've got about $1 of risk on this one, 1/3%. And then this one collects from, call that 282. And it's going to cash at 279. So that's a 3 execution R on a big fat index. That's pure opportunity trading. And I was talking about that with Bob Wark, and this was one of those where if you are prepared, then you can make the play. And his comment back was, must be present to win. So that reminds me that mindfulness and awareness and preparation and prepared to act, you get really lucky when you are well prepared. So that's what the afternoon kind of looked like. And I'm expecting more fireworks tomorrow with the hybrid frog being my main strategy. And I'm going to stick with the big indexes, kind of like we did today, the usual suspects. So a variety of trades, long and short today, but the SSC pattern, the Z3 pinch breakdown pattern just really paid off. This is why you pay attention to that Z3P. This is actually a super pinch. Let's count them. There's the RL270s in there right here. Here's the RL90. There's the RL30 and the RL10. And this is a super pinch in here with the Z score within a frog box. So this is a breakout of that super pinch. And that's what happens when the acorn sprouts and grows. You get that nice big move, and then just a standard exit to make bank on 3R in hand. Just take it. What do you want? Pure opportunistic. Okay? So that's what I want to say about that. Let's shift to the daily report now. All right. Where's my shapes? Okay. All right. So let's. We've already seen the market health check. So we're still in bullish normal conditions. You can see that little sell-off today took it out. Yesterday, this was in the overbought, but both the 10-day and the 3-day got smacked down pretty hard today. We're still 7.75% above the 200-day moving average. The ADX is starting to weaken, so that bullish move is really weakened. ATR percentage went up a little fraction here to 1.9%. The risk Z is still showing us be ready for sharp volatility moves in either direction. Remember, this is where we are. The last 4 times it was at that zero state. There were sharp moves in either direction. So you can't predict direction. All you can say is batten down the hatches before the storm hits. Right? No signals and channeling and overreaction. We've got the Min Pains, Procter and Gamble, Travelers, United Health, Coke, and Verizon. The 10-day Max Pains that got smacked hard today. Boeing, Disney, Merck, U.S. Steel, Chevron, Halliburton, Schlumberger, Devon Energy, XOP, and XLE. Everything energy is really weak right now. Next up is the Dow Tactical Summary. Conspicuous by their absence. Let me let that come up on your screen. Yeah, no dojis today, no swing patterns, and the move was so large and started so near the 10-day high that nothing tests out on the auto framer. So this is not a time to be thinking about swing trades at all. Not at all. This is a time to be emphasizing the intraday trades. Merck was the big weakness today, and it broke down. It's the only one to break down below its 10-day low. Only one doji in emerging markets. A channeling and overreaction in treasuries, which tests out pretty well at 2.7 to 1. I think that one has a real chance to work tomorrow on the flight to quality. Metals and mining and oil exploration got smashed pretty hard today. Utilities as a defensive play had some breakouts, and emerging markets broke out. So defensive plays ruled the day. Auto framer, only treasuries test out better than 2 to 1. There's your mechanical trade frames. The daily squeezes, the ranges were so large today because of that surprise sell-off that only Walmart and Salesforce test out as one-day pops on the basis of the expanded ranges today. But Apple was the next closest thing, and there's Treasuries and XLK. So I still think that's a pretty good stack right there. Walmart, Tech, and Treasuries. And as Bill showed us, I still think the even the real estate has an opportunity to make some gains tomorrow as a defensive play. Spring is still dominating the seasonality here, but a number of them went back out of the Red River on today's weakness in selling. So this is a cautionary tale. Japan and utilities had some strength today as defensive plays. But I think I'm going to be playing the indices and treasuries rather than too many peripherals. Merck and Disney, big sell-offs. Boeing suffered. Maybe Travelers and Procter and Gamble. Silver and gold did not participate in the upside. Maybe there was just, the tweet came too late after the futures markets for them had already closed. But watch for them to pop tomorrow. Now that people are going to try to hurry up and get some defensive plays on. That wouldn't be a surprise. This little recovery is now at risk. And coming back to 320 would be the concern. This little rollover, not promising. That could look like this and come back. The slope stat is already weak, so this thing could certainly come down and test this. So that's everything I want to cover for tonight. Give you some time to get some stuff prepped. Nice, concise 40 minutes, 45 minutes. Lots of, I think, good case studies. They're all in Patreon and in the chat room. Today was an opportunity day on that grinding move up with the higher lows, that pattern 4 and that supported spring crossing. But then also at the end of the day, that surprise opportunity must be present to win. The Z3 pinch breakdown, the super pinch breakdown. That's what opportunistic trading looks like. That's hybrid trading in a nutshell. Okay, so that's everything I got for you. I'll get this published and posted in the usual spots. Take good care, guys, and we will see you in the chat room.